It's Thursday, April 1st, 2021, and today we'll be talking about Clutch fills up the tank with $60 million, the Ontario Securities Commission cracks down on crypto, Dapper Labs runs it back with $305 million, and Getty Images takes another dip into Canada with Unsplash. Let's get started. First up, Clutch fills up the tank with $60 million. Alex, tell me about Clutch.
Well, Clutch is a Canada-based online used car dealership, sorry. And it's a marketplace. It operates in Halifax and Toronto, and I think it just opened up Vancouver. But instead of me giving you a weak description of it, why don't we get Dan, the CEO of Clutch, up on stage?
I love that idea. Welcome, Dan, to TechTO Quick Takes. Now, longtime TechTO community members will remember Clutch's CEO, Dan Park, from his VC days when he used to hang out at disreputable events like ours, looking for the next big thing. And a lot of people dispute this. So I had to go through the archives to find some proof. And I just want to show you, look what I found here.
Oh, no. Oh, look at that. Wow.
Now, if you are listening later on the podcast, we'll try to include this photo of a young Alex and Dan drinking a beer at TechTO in the show notes, or head over to our YouTube to see it in HD. All right, over to you, Alex and Dan.
Well, I have to, that tattoo, that TechTO logo icon tattoo is real, for anyone wondering. Dan, so why don't you tell us about Clutch? Give us your description, because I think people here use car dealership to hear online. They don't know what that means. So what does Clutch actually do?
Yeah, so thanks for having me on the show. We actually don't even use the word dealership. We find that taboo in our organization. We call ourselves a vertically integrated online used car retailer. So what we do is we provide a better, cheaper, faster, more transparent way to buy a car entirely online. So instead of spending 4 hours in a dealership or meeting some stranger in a Tim Hortons parking lot, you go to our website, you pick the car you want, you go through our process, and we deliver it right to your door.
And these are all used cars, right?
All used cars. We take every single one into inventory. We inspect each one. We certify them. We provide every car with a 10-day money-back guarantee. And again, through a very online, seamless process, kind of in a world where you order food with a click of a button, or you stream video to your TV or to your home directly. We're offering an easy way to buy a car, something that doesn't really exist in Canada at this point.
And Clutch is right now in Halifax, Toronto, and Vancouver. Is that correct?
You got it. Yep, that's right.
Yeah, and usually when we get CEOs on our podcast to talk about a raise, they're a founder. In this case, you're not a founder. You were at Uber Eats and got recruited. So tell us a bit about who's behind Clutch, how it came into existence.
Yeah, so Clutch was started back in 2016 by my partner, Steven Seibel. He was living in the US at the time, had this terrible experience buying a car when he was in Pittsburgh. Started looking around the market. Back then, there was a few kind of earlier stage businesses in the US selling cars online. He's Canadian, I'm also Canadian. We looked at the opportunity here in Canada and thought to ourselves, look, like this is something Canadians desperately need. We're kind of still stuck back in the, frankly, 80s and 90s when it comes to car buying, and we're trying to take that and really modernize that experience for the consumer.
And basically, they recruited you from Uber Eats, and you've been there for about a year and a half.
You got it, yeah. And surprisingly, delivering. There's a lot of parallels to delivering food and delivering a car.
Okay, I wouldn't go on. I want to know more now.
Yeah, I mean, look, like we're expanding across the country. We're trying to create a national brand. The team, a lot of earlier stage tech entrepreneurs that want to build something meaningful in Canada. So the talent recruiting is very similar. The organization, city GMs, very similar. And so there's certainly a model that we can replicate when it comes to at least people structure. And then from a consumer experience and consumer brand perspective, there's also something we can do there that's very similar.
So that's pretty interesting. And I think there's a couple other similarities I'd like to get to. I'd like to hear about the raise, but before that, how's the last year and a half been? I feel like it's been a roller coaster ride, which you probably experienced at Uber as well at one point.
Yeah, I think it's been more of a certainly more of a roller coaster ride here. I think, we didn't have the unfortunate experience with the pandemic when I was at Uber. And so for me, when I joined, it was back in September of 2019, things were going well. But we were running out of cash. I remember I was literally in my living room. I think I was in the fetal position telling my wife that I think this company, I don't know what's going to happen here because we were running out of cash. I think you and I might have met up for beers at some point
Yeah.
in that time. And then we saw our sales evaporate, like literally April of 2020, we basically went to zero. And so, sitting there, a financing potentially kind of closing in mid-April, running out of cash, like, is this company going to exist? Big question mark there. And then demand started slowly coming back. Folks kind of started getting used to the idea of being more locked down and the implications of the pandemic. Saw the need for transportation, public transit and ride sharing, less appealing for obvious reasons. And so people started buying cars again. And for them, a lot of people looked to Clutch, an online solution, to get a car delivered right to your door without having to go anywhere, which I think, as we look kind of a year back now, that trend is going to continue. And we think that, like many other e-commerce categories where people kind of had that initial belief that you needed to go in store to go and get that thing. I think even 20 years ago, the thought of getting shoes online was insane.
Yeah.
We're thinking that, I think, car buying becomes one of those purchases that people, certainly feel way more comfortable making online. And we're proving that with the customers that we've already sold to.
And so that gets us to this week's news. You raised, the headline number is 60 million, but I believe it's 20 million equity and 40 million in debt. So tell us a bit about what you raised, who it's from, how this round came together.
Yeah, so that's right, 20 million of equity, 40 of debt. The 40 of debt is from a fund called Upper 90. Upper 90 provides financing to Clearbank. They are the primary source of our what we call floor plan financing, which is effectively to buy inventory. And so that allows us to buy cars. Again, we buy every single car and we take those into inventory, and that requires capital. But it also ensures that the customer is getting a really great experience and a really high quality vehicle, and is the reason why we can then back that car with a 10-day money back guarantee. And then the equity, is more traditional growth capital to continue to scale operations, hire people, and conduct marketing.
So I have to ask you one question about this round. I think in the Globe and Mail article that came out when you announced the round, you said you raised twice what you thought you could raise. So what does that mean? It was a valuation, or there was more money out there than you thought? What surprised you about this round?
Yeah, a combination of both. I think the pandemic, having been in VC, rounds used to take a long time to come together. You'd have to fly to San Francisco, you'd have to fly to New York. Typically the partner meetings were happening on a Monday. And so you could maybe get one, maybe two every Monday. And so it would take 6 to 8 weeks to even make those rounds, get the feedback, go back and forth in diligence. Kind of in a remote world where you're now, doing deals on Zoom, you can schedule 3, 4, 5, 6 partner meetings on a given day. And so, while we weren't necessarily looking for capital at the time, I think a lot of folks looked to Clutch as a potential investment that they could be making. And so while we weren't looking for capital, we did get a lot of interest last fall. And so we decided to kind of pursue a Series A much, much earlier than we'd anticipated, particularly given we'd raised our seed round in April.
Cool. And then when we do these shows, we like to say, what's the takeaway for entrepreneurs or people in the ecosystem? So I usually give a couple. I love to think, put yourself in a founders or someone in the ecosystem. Why is this an interesting news? Other than Dan, everyone loves Dan, and we hope to see another big, huge Canadian company. But what's interesting news and takeaways for people in the ecosystem about this round?
I think there's a few. I think the one thing, and I'm certainly guilty of this. Back when I was in VC, I used to just kind of categorically reject Canadian-only companies. And I've heard you talk about this before. I think I listened to the edition from a couple of weeks ago on Simple. I think there's a few categories where Canadian-only companies are now becoming much more attractive. And I think big ones like food, fintech, transportation, healthcare are certainly those categories. And so, having spent time kind of doing the rounds with a bunch of big VCs, not only in Canada, but in the US, there's a much greater degree of appetite for Canadian-only businesses around the right categories. So I think, for any of those founders out there that are maybe frustrated around, maybe being a Canadian-only play, I think the tides are turning. And if you're in the right market, and that's a big if, there's an opportunity to scale something that's venture backed. And I think the last one would be just the speed at which deals happen right now. is much faster than it was prior to the pandemic. And so, if you're looking to go raise capital, having all your ducks in a row and making sure that, you've got, everything in place before you go out to market, and going out to market quickly is probably the best thing you can do, because it allows for a more robust fundraising process.
Awesome. I love those takeaways. I feel like you read my notes. One question with the Canada only play. How much do you think you were helped? Because I think by US and European competitors being publicly traded.
I think it's definitely a data point that we were able to point to, and so instead of talking about the potential, we talked a little bit more about our execution strategy and how we continue to use our playbook to scale a business that we think can be obviously venture scale.
Cool. Dan, thank you so much for your time. Congratulations on the great round, and I hope you're across all of Canada shortly. Because I think what I read, you're going to be at least 2 more cities this year.
Yeah, that's the goal, and excited to try to serve as many Canadians as possible.
Do you need to run a survey, figure out which cities? Should we get a social media thing going?
We can do a those campaigns where if you get enough users and you kind of launch the city. Yeah.
So you're going to Yukon next.
Well, I mean, it's close to my home province or home territory, so I feel like at some point we need to be up there.
Cool. Thank you so much, Dan.
All right. Thanks, guys.
All right. That was awesome. Alex, any other takeaways that you wanted to note there? I know that Dan was almost reading your notes verbatim there. Anything else you wanted to add?
Well, I think going back to I think there's a narrative violation here. Dan talked about how it's a Canada only play and it's a big market, so that's a narrative violation. I think the other 2 parts of that narrative violation, it's not a founder-led company. The CEO here is someone brought in, and so that proves that there's many different ways to have a team, and you can still be a founder and not be running the CEO of the company. And I think you're going to see more of those in the next little while. And I think the other thing I'd say with narrative violation is there were basically 2 mature, growing or established marketplaces, cities for local marketplace. So Toronto is growing fast, and Halifax is a bit more mature, just up in Vancouver. Usually, if you talk to any of the local marketplace companies in Canada, they'll be saying, hey, you have to go prove you can open this in Boston or Chicago, or if you look at Ritual or if you look at Jiffy, after Toronto, they went to the States. So I think that just further demonstrates how the narrative violation here. And I hopefully it's a sign of things are changing.
I love that. Alex, if you're enjoying keeping up to date on the people like Dan and the companies like Clutch that are shaping the Canadian tech ecosystem, you need to subscribe to the TechTO newsletter, don't you?
You have to. 3 times a week, each day, different subject.
What was your favorite part of yesterday's issue?
Well, I actually think we did something in yesterday's issue, and I don't think people realize what we did. We had the company in the spotlight basically announced their fundraising in that little write-up we have. And the company spotlight was a company called Wombo, which is like a consumer app for lip syncing. And it's, in the description of the interview came up that he's raised 5.5 million seed round. And the reason I think that's not out there is I got a couple of VCs texting me early in the day going, oh, Wombo got a round done. When did this happen? so that was kind of exciting for me.
Awesome. And I think we've got some more Wombo content coming up later outside of the quick takes format. But next up for right now, the OSC cracks down on crypto. Alex, you got to tell me about this crackdown. So
the OSC and the Canadian Securities Administration, so the OSC is Ontario Securities Commission, both came out with a couple announcements earlier this week. Monday, so first came out the CSA saying, hey, here's a framework. If you want to be a platform allowing Canadians to trade crypto assets, what you have to do to be legally operate in this country. And basically, they want you to register as an investment dealer and become a member of IROC, which stands for Investment Industry Regulatory Organization of Canada. And then, I think within minutes, the OSC followed up on that announcement, which they knew was coming, and said, hey, if you don't basically register with us and follow these rules within 3 weeks, we're going to take action against you.
Wow. So what does this mean for the Canadian crypto industry?
It's not clear, but so I'll try to break it down a few ways. I think, first of all, depending on the actions that are taken, how fast OSC takes actions, it may basically block Canadians from investing in any crypto asset. Because as of now, there's only one person that complies with this, and Jason, you'll be happy to hear this, is Wealthsimple Trade. There's about 600 other platforms that allow you to trade crypto assets in Canada, and none of them have followed these regulations except for Wealthsimple Trade. So if you could assume that no one complies within 3 weeks and registers, and depending on the actions OSC takes, it might be very hard to trade. It might get very expensive. You may not be able to sell your assets in some platforms. Look, I understand why the regulators are doing this. We've had problems with, what was it, Quadriga CX, which basically looks like a fraud that took a lot of money. CoinSquare was charged with manipulating the market. So the regulators are responsible for making sure that consumers are safe and their investments are safe. But, and it's one thing to impact consumers. I think the other more important or longer term impact might be here is, what does it mean for our crypto industry? You have, like, we're going to talk about Top Shot and Dapper Labs. They're crypto assets. I don't know if they're going to apply this to NFTs and they're going to apply this because, it could be hard. Not, maybe Dapper Labs, with all the money they've raised, can comply and go through the process. But if you're a new crypto platform, someone looking to do something innovative in the exchange of crypto assets, you may just say, I don't want to do the Canadian market. I don't want to even operate in Canada. And it could basically put us further behind the crypto startup scene.
So the worry isn't as much that consumers themselves won't be able to, like, I don't know, pay for a Tim Hortons coffee with Dogecoin, and more about the innovation that's coming out of the ecosystem. Is this going to stop people from really building new applications in the space?
Yeah. So I do actually think, I do worry about consumers, because they should be able to invest in these assets. Like, if you look at the SEC in the States, they do not regulate platforms such as Coinbase because they don't view digital currencies as a security. So as a consumer, maybe we may, if you believe that crypto is a great place to get returns, we're going to, and we're banned from it, the Canadians will have less returns and less wealthy, but more, but again, if you go job creation and the economy, I'm worried that we're going to freeze a certain part of our startup ecosystem.
On the other hand, we have some amazing innovation in the space as well with the Purpose Investments Bitcoin ETF. I think it's one of North America's only, first, if not only,
it was the first
exchange traded fund.
I think there was two more exchange in the Canadian market right after Purpose, but yeah, it was the first.
And these are people that are working with the regulators as well, and are probably painting a path forward for all sorts of different investment vehicles in the space. So my hope is that if on one hand we take away some of these shady actors, on one hand we've got people who are cleaning up the space and making it safe for people to participate on the other. Yeah,
look, with my AngelList hat on, I've worked with the regulators. They mean well, and they do, and they move relatively faster than you want, but it's they're in a tight spot. Like, their primary objective is to protect your grandmother, right, from getting scammed or having
right? But yeah, I understand.
Yeah, but so, but at the flip side is they have to move fast, and I think something like crypto just keeps them moving so quickly. I feel like we're in the second inning of regulations, and crypto's still moving so fast. And AngelList, like in early investing in, I don't know how many angels in early Canadians invest in private markets, but if you look, the estimates I've seen for like 4.5 million Canadians have owned a crypto asset at one point or another. So it is widespread. It's an asset people want exposure to, but the regulators have to be forced, and there's got to be they have to find a way that works without impeding our ecosystem.
So if you're a member of the TechTO community, why should this news be on your radar?
Well, I imagine lots of our members invest in crypto. I imagine a lot of them work at blockchain or crypto companies that may be impacted by this. So, first of all, if you're trading on a foreign trading platform, I don't know what you can do, but you have to be aware that they may not allow you to trade soon. I think if you're looking at building a business with crypto assets trading on it, so again, it could be an NFT exchange. You might want to look into the regulation and see what the burden is and budget stuff so you can be compliant. And I'm like, what is Ethereum? Like, there's a lot of people that were early in the Ethereum market, and what do they do, and how does it impact their thinking? And do they all leave the country? I'm not sure.
Right now, Alex, if you want to join a community of Canadian tech founders, entrepreneurs, and investors to both discuss the implications of what this means for your crypto-related businesses, but also just to be part of something bigger to help the ecosystem, you've got to check out the techto.org Insider Membership Program. Okay. Alex and I are there every single day answering questions, discussing the news, making introductions, and helping grow the community. Alex, who have you met recently in the Insider Program?
So this week I was talking to Christy, I think it's Amen. She's in the prairies, started a career in finance, then saw the light, became an entrepreneur. She's launched a company called Hion, which is basically helping people that want to sell goods on marketplaces meet people that actually know how to do it. So she's creating a marketplace to enable people to sell stuff on marketplaces.
I love that. And what are you going to sell in Hion first, Alex?
According to my wife, a bunch of old electronics.
Yeah. According to you and your dad, probably you'll never part with those. All right. Next up, Dapper Labs runs it back with $305 million round. Now, last month on Quick Takes, we spoke about Vancouver's Dapper Labs, Top Shot, NFTs, and the massive round they raised then. What's happening this month?
Well, I guess they raised the 300 million more, and it seems like everyone and their mother's investing in it.
So tell me, who's everyone and their mother?
So like Kotu led it, and Kotu actually was an early investor or a late stage investor in Facebook and many other companies. But you've got 40 individuals from Michael Jordan and Kevin Durant to I guess what was it? A bunch of NBA, a bunch of NHL players, entertainers. So you have like Ashton Kutcher's funds invested in it. You got Shawn Mendes invested in it. Will Smith through his fund, which is called Dreamers, invested in it. And then you had a bunch of VCs that already have exposure double down.
This board meeting is going to be lit.
Oh, I guess maybe we're going to see the Top Shot for concerts or something like that. Maybe we'll get like Will Smith rapping cards and Shawn Mendes like best clips.
Okay, well, let's start with so the thing they have in market, of course, is the Top Shot NFTs. Tell me a little bit about the stats. What's happening with this NBA offering?
I think last time we talked, which was a month ago, they were talking about 200 million in transactions. They're now up to 500 million, so that's 2.5 times a month, and they have 800,000 accounts registered in the public beta testing. So it doesn't sound like beta anymore, but that's a lot of accounts signed up for a crypto asset. So I think the Top Shot continues to grow, continues to see interest. But I think the underlying story here, which I guess for me is more interesting, is how they're enabling what the blockchain they're using is a blockchain. They built a product called Flow. Okay,
that's interesting. So tell me more about Flow exactly.
So I guess what Dapper Labs learned with CryptoKitties, I don't know if you remember that, Buzz, like they basically melted Ethereum blockchain. And so they said, we can't have, we need to make a more consumer scalable blockchain. So they produced their own open source blockchain called Flow. They say it's to handle mainstream customer applications at scale. And so it's got a couple interesting things. First of all, it takes fiat currency and credit cards. So that means it takes USD, Canadian D. You don't have to go first buy, Bitcoin and change Bitcoin into something else. So it takes away some of the complexity of crypto. It's scaled to handle extremely high transaction volume. So one of the things with low fees and low environmental concerns. So one of the issues you have with either Ether or Ethereum or Bitcoin is the number of transactions you can do per second are limited compared to something like Visa, and there's a huge transaction cost that they pay to nodes, and there's a huge environmental issue. So Flow supposedly takes care of this, and it was purposely built for NFT marketplaces. And you have supposedly Warner Music, Ubisoft, Warner Media, UFC, and thousands of other third-party developers already and artists already building upon Flow.
And so you mentioned it's open source, so like anyone can build their own marketplace on top of that.
I assume so. My view is like lots of open source projects. There's probably some stuff you can do for free, and there's some premium services that you can pay. And I'm not sure where Dapper Labs.
And so is the opportunity that people are seeing with this round, is it for the commercialization of Flow, or is it just for them to continue to repeat the NBA, the NBA experiment with other brands?
So it's definitely, I think depends on who you're the investor, right? I think these athletes see what's going on, and they know that all the other leagues are going to do this. So you got the NFL, NBL, and Major League Baseball, you got hockey. So they see that, and there's a bunch of IP licenses that Dapper has. So there is a bit, hey, if 800 million transactions every month or whatever it is, they get a cut of it. This is an interesting market. So I think there's a subset of people that say, Top Shot knows how to build a cool IP. If they leverage other people's IP, it'll be a huge market. And I think there's some people looking, hey, this flow could also be interesting blockchain to be associated with. So not sure exactly what people think, but I imagine it's a bit of both.
And why is this interesting for the TechTO community?
Well, this shows you what exponential growth looks like and what it does, right? Like most people don't I think when people venture scale and they hear exponential, they don't, they still think linearly. And you're talking about something that's gone from 200 to 500 million transactions in a month. There's 800,000 registered users in, I don't know, a couple months. So just idea of scale and the money that attracts. And I think this now plays into our previous topic. What happens now with the OSC regulations and how does this impact it?
Right.
Because I look at now, if with the impact Dapper's having, and if we believe Flow becomes an important blockchain, what are spin-offs and implications for Vancouver? Now, again, their team's probably partially remote given the current environment, but they have a core team in Vancouver. And, when you see a big company succeed, like Shopify, they start spinning off employees that understand e-commerce, in this case, understand NFTs, understand the Flow blockchain. What could this, do to juice the Vancouver ecosystem?
Sure. So we've got both Ethereum and Flow with some Canadian roots, which is pretty exciting. Alex, we have some really exciting live streams coming up. We've got Founders and Funding, the untold stories behind the raise, where you, Alex, you sit down with a venture-backed CEO and the VC partner that made the bet for a candid conversation of how it all happened. Who are you going to be sitting down with on Friday, April 9th?
So Chris from Radiant Capital and Lloyd from Boast.ai. So Boast.ai just raised, I think it was a $100 million round. Chris, Radiant Capital is somewhere between a traditional venture firm and a PE firm. So they're not looking for the 100x return, but they're looking for more, quote unquote, guaranteed, 10 bagger. So should be an interesting, I think Boast.ai is one of those slow burns that have now gone into a huge flame, and it'll be interesting. And Lloyd's has a lot of energy, so I'm looking forward to it.
You'll also be able to listen later on TechTO's Founders and Funding podcast, available wherever you listen to podcasts. Then on April 12th, we have the next episode of TechTO Together, where we introduce the Canadian tech ecosystem to some of our favorite entrepreneurs from all around the world who are scaling incredible businesses so that we can learn from them and grow together. Alex, what do we have coming up on April 12th?
Well, April 12th is brought to you by the letter W, because we have founders from Wonder School and Rapbook. Wonder School is changed how daycares operate. Chris, the founder, is based in the Valley, and they're going to be talking to us about that. And then you've got Nason, who's coming on from Rapbook, and Rapbook is basically a mashup between fintech and entertainment industry, making it easier for you to run your TV or film production.
And then we have TechTO Talent, where we share the insights on building a career in tech. What's happening on April 21st?
Well, apparently I'm going to get a lot smarter about tech recruiting and have a conversation with some people from Shopify and a few other people busy recruiting tech talent.
Fantastic. Our last take of the day, Getty Images takes another dip into Canada with Unsplash. First, Getty Images takes over iStock Photo in Calgary, and now they're scooping up Unsplash in Montreal. Alex, tell us about Unsplash.
I think Unsplash is everyone's favorite source for non-copyright images they can use in their presentations, in their websites. So Unsplash is Montreal-based, started off as a Tumblr blog, if you remember Tumblr. And basically they've become the go-to source for cool photography that you can search, download, and use in basically anywhere.
And it's kind of a cool model. I know that, I use Unsplash's API at my business, and we don't pay anything for it. Can you talk a little bit about that?
Well, also, I think their business has a few different angles. Like, I think what's most interesting to me is actually, not sure which one it is Unsplash brands or what they call, because they actually pay, brands pay to be included in their search. And so I guess the example is, let's say Tim Hortons can pay to include a bunch of Tim Hortons cups. So when someone searches coffee, you see a coffee mug and Tim Hortons comes at the top, because the idea there is, hey, you get more visibility for your brand, and it doesn't stay one place. That person puts that in a presentation. They go, when you did live events in person, they go and sit in front of 1,000 people, and then they're talking about coffee, or they bring up the slide, and there's a Tim Hortons advertisement right in front of you. Mm-hmm. So it's interesting where they've taken they're the exact opposite. Everywhere else, who you're targeting, it's a very targeted market. You come up with your own content. They're saying, hey, people are searching to include free photography. Why don't you pay to be included there? They also have a couple other products. One's Unsplash Hired, which is now to, if you're one of the top photographers or a creative artist, you can see their profile and you can just literally click to hire them right there. So a bit of a person marketplace. The API, I'm not sure. Do they charge you for the API?
They don't charge me. I'm pretty sure they take the information of the searches that our customers do, and they use that data to talk and which pictures people select, and use that data to maybe understand from a whole bunch of unstructured images which are the most popular.
Yeah. So what's the most popular on a venue?
I don't know. Probably a nice relaxing beach somewhere. So this is exciting news. Can you tell us a little bit more about this deal, Alex?
Well, not much has been disclosed about the acquisition price. So what I can tell you a bit more is about what that Unsplash is going to be an independent company, division separately run with Michael still in charge of it.
Isn't that what they always say at the beginning, though, Alex?
Yeah, and I think in this case, I have a feeling that they have to say independent because Getty's business model is so different that if they do merge the two, and they'll just be imagine the KPIs and what success looks like for the two organizations are so different,
right? That
and I think I could believe that Getty could boost, I think the Getty resources and distribution can boost the ability to get Unsplash to be much bigger. So I think I actually think there's sincere desire to do this in the near term and to see what can happen.
Is this an example of like a Goliath picking up a David here and making sure that this new model doesn't come and threaten the throne?
Yeah, no, I think it's two very different use cases. I think Getty's very smart at acquiring. It wants its own ecosystem here of images, and so any business model that exists, they want to complement, and they can. There's probably some shared services they can take advantage of. They could probably cross promote. Hey, you're a good photographer that we use in Getty, but maybe you have a bunch of images you want to get out there and get some business. I don't have a really big insight into how Getty thinks, but again, this is not happened overnight. They first met Getty Images in 2016. So, this is a 5-year relationship ending up in a marriage.
So tell me about the takeaways for the TechTO community.
Well, going back to that, acquisitions don't happen overnight. And I think the best companies get bought, not sold. So my guess here is, you meet a company, you meet a potential acquirer in 2016. Eventually, it becomes a must-own. Someone wants to stake their reputation within the organization. So, doesn't happen that fast. Getty seems to I don't know if Canada is great at creating interesting new businesses around photography and stock photos, or if Getty just likes shopping in Canada. So my guess is if you're going to start something around stock photography or images, get to know Getty sooner rather than later. And I think the other thing is, my guess, because you haven't seen the valuation number here, is that the exit was good, but not a venture home run. Again, and not everything has to be venture size. But which also, because the flip side of exponential, you're talking another company that has incredible numbers. I think they've got thousands of partner integrations. They've got 3 billion downloads, 2 million images on Splash. And my feeling is this is, a double or triple outcome, but not a home run. So it's really hard to build a sustainable, large, impactful business, no matter what happens. And it's not over till it's over.
Oh, it always is. Thank you, Alex. What a week in Canadian tech. If you haven't already, I need you to like and subscribe wherever you're watching or listening, and we will see you on the inside.
We're in the business of delivering impossible things. We're in the business of delivering things that nobody's ever seen before.
If you build that culture, you'll come up with really cool and innovative stuff, and literally could be in the next multi-billion-dollar idea. So this conversation is largely going to be about scaling yourself and scaling your leadership team.
I want to talk about one of the biggest struggles that I think a lot of startups face early on, which is building initial traction.